Okay, let's unpack this. Imagine a date that fundamentally changed global finance, a real point of no return.
Right.
And almost everyone missed it. It just sounded like some boring bureaucratic update. We're talking about November 22, 2025.
And according to the research we've all been looking at, that was the day.
That was the day global finance went fully transparent, whether it was ready for it or not.
That invisible earthquake is absolutely the focus of our deep dive today. We're looking at the full, complete migration of ISO 2022.
Which sounds so technical.
It does, but it's not just a software update. The reports we've seen frame it as the single most impactful financial messaging upgrade in modern history.
So our mission for you is to understand how this new standard, this new language, immediately exposed all the weaknesses of the old debt-based system.
And crucially, what robust infrastructure was already positioned and, compliant to replace it.
So before we get into the really dramatic consequences, we have to clarify what ISO 2022 actually is.
Because the name is incredibly dull.
Exactly, which is probably why it slipped under the radar. So what's critical for you to understand is what it isn't. It's not a new currency. It's not a blockchain itself.
And it is definitely not a digital asset.
It's communication infrastructure.
Precisely. ISO 2022 is, at its heart, a universal messaging language. Think of it as a mandatory, globally enforced dictionary.
A dictionary, I like that.
Yeah, a dictionary and data structure that dictates how every bank in the world communicates payment instructions.
And before this?
Before this, global finance was just a mess of fragmented, archaic formats, proprietary messages that were restrictive, and that restriction allowed risk and leverage to be hidden right inside the system's architecture.
So that concealment was the entire game. The old system was optimized for speed, but also for obscurity.
Absolutely. The old formats limited you to maybe, 300 data fields in a message? So if you don't have a field for actual verified collateral or real-time liquidity status...
But then that information just doesn't exist in the message.
Exactly. It gave the system this inherent protection from scrutiny. ISO 2022 changes that completely. It expands the messaging capacity to over 2,000 standardized fields. It forces granular detail and transparency.
And what's really fascinating here is the sheer scope of this synchronization that happened on November 22nd, 2025.
Yeah.
This wasn't some phased rollout where one country adopts it and then another. The sources indicate a near simultaneous conversion, a global flip of the switch.
It was a mandated global flip, coordinated over years, yes. We're talking about SWIFT, which is the messaging backbone for everything,
right,
but also the actual central bank clearing infrastructures. So the Federal Reserve's Fedwire, the European Central Bank's Target Services, the Bank of England.
And even the BRICS settlement network.
And the BRICS networks, yes. You also have the IMF and all major global clearing infrastructures, all of them synchronized.
So if you look at that scale, you have competing geopolitical blocs all adopting one standard. It means for the first time in history, the entire high-value global banking system is speaking the exact same richly detailed language.
And that data richness is the revelation. It's not just an upgrade to a modern XML format. It enforces structural consistency.
What does that mean in practice?
It means every high-value cross-border payment now carries a UETR, a unique end-to-end transaction reference.
Okay.
And that reference is maintained across every single intermediary bank and regulator. This isn't just like tracking a package. It's like tracking the entire history and chemical composition of the package in real time.
That phrase from the sources, not an upgrade but a revelation, it really captures the weight of this.
It does.
Because what happens when you standardize every single detail globally, you move from systems designed to hide risk to systems where transparency is mandatory. It's not an option anymore.
And the immediate operational consequence is, every variable is now unified and traceable.
Every variable?
The payment instruction, the metadata, the routing code, the specific asset type, the settlement detail, everything. There's no more using data fragmentation or, technical incompatibilities as an excuse for hiding things.
Okay, let's talk about the skeletons in the closet. The old debt system was fundamentally built on that opacity, on the time it took to reconcile everything. So what specifically did this mandatory transparency eliminate? This is where it gets really interesting.
It eliminated everything related to phantom leverage, to unverified risk. The old system, especially with the fractional reserve model, it thrived on being able to create credit off balance sheet.
What we could call unbacked synthetic credit.
Exactly. And these liabilities could be passed between institutions or concealed through fragmentation, only surfacing weeks later during these delayed reporting cycles.
So the ability to just create liquidity out of thin air, knowing that the actual settlement was going to lag far behind, that was the lifeblood of the whole structure.
And when you introduce ISO 2022, you just eliminate those time delays. You eliminate the information gaps.
It's like a poison pill for a system like that.
Transparency in a debt-based system is absolutely a poison pill. The old system relied on hiding liquidity gaps, vast derivatives, mismatches, synthetic assets.
The derivatives market.
I mean, think about the massive over-the-counter derivatives market.
Yeah.
Before 2025, the risk from those instruments could only be measured in, like, quarterly reports.
Way too late.
Way too late. After November 22nd, when every single underlying settlement is standardized, you can calculate the net risk exposure of any major institution globally in real time.
I have to interject here, though. November 2025 seems incredibly aggressive for the entire global financial complex, including the BRICS network, to synchronize all at once.
It does.
Did the sources address the massive operational risk in that? I mean, surely there must have been chaos, or at least major friction.
The sources confirmed the pressure was immense. One described it as a controlled demolition. The transition was forced because the underlying debt system was becoming so fragile. They realized the risk of not synchronizing was actually greater than the risk of the flip itself.
So they needed the data.
They needed rich, unified data to even begin to assess the true state of global debt. But the unexpected consequence wasn't operational failure. It was the immediate, blinding clarity of insolvency across key institutions.
So the moment the light was flipped on, the depth of the leverage just became visible, and institutions that were leveraged 50-to-1 suddenly had their assets and liabilities measured on a unified global standard.
And that is the end of opaque synthetic credit creation.
That's the takeaway. Banks can no longer just generate endless amounts of unbacked credit shielded by these fragmented old-school messages.
Not when every major central bank and clearinghouse is speaking the same ISO 2022 language. Every leverage ratio, every derivative imbalance, every liquidity hole becomes instantly obvious and fully traceable.
So that raises the big question. If a system is built on leverage and the ability to hide its own instability, what happens when a global real-time spotlight is shown on it?
Visibility exposes weakness.
And the conclusion from the analysts?
It was stark. They said when a global system built entirely on opacity is forced to become transparent, systemic collapse is not a possibility. It's an inevitability.
So ISO 2022 didn't create the weakness.
No. It just made the weakness undeniable, measurable, and visible to everyone all at the same time.
So we've established the old foundation is broken, and ISO 2022 was the giant transparent window that let the world see the rot.
Right.
Crucially, it didn't fix the debt system. It acted as the final prerequisite for the new system.
That is the critical distinction. Transparency is a requirement for survival and trust, but it's not a solution in itself.
It just created an existential crisis for the legacy rails.
Exactly.
Yeah.
Once you have this mandatory standardization, this unified visibility, the future financial architecture must adhere to an entirely new set of rules. The old tech just can't comply with the new data requirements.
So what are those non-negotiable requirements that the sources outline for this post-November 2025 world?
The required shift is immense. First, settlements must be provable in real time.
Provable.
Second, assets have to be fully verifiable, meaning you have to know exactly where the collateral is and its current value. Third, that collateral has to be truly transparent, no more synthetic claims.
Okay.
Fourth, all ledgers must be auditable, either by third parties or through cryptographic proof. And finally, the new digital systems must be designed to interoperate seamlessly with the regulated banking infrastructure.
The same infrastructure that's now mandated to use ISO 2022.
Right.
So if we look back at that fractional debt architecture, its entire mechanism relied on obscuring ownership. If transparency is mandatory,
You can no longer settle on debt that is potentially unbacked.
it forces a complete paradigm shift.
The world cannot settle on debt. Once every financial message is demanding verifiable collateral and real liquidity details. The system has to shift its settlement architecture to asset-backed systems, to real collateral and provable on-chain value.
Which is why the search for a new compliant backbone became so urgent right after the migration.
Exactly.
So the foundation is exposed, the demands of the new transparent world are crystal clear. Now we look at the solution presented in the sources. Transparent-Metallicus.
Hmm.
And this is described not as some speculative experiment, but as an institutional-grade, compliance-first settlement infrastructure.
And that phrase, compliance first, is fundamental. Unlike a lot of digital asset projects, Metallicus spent over 10 years building its infrastructure specifically to align with regulators, with the technical demands of transparency and the institutional need for verified identity.
They anticipated this.
They anticipated the need for auditable, verifiable settlement rails that can scale and handle that massive ISO 2022 data load.
Okay, so let's run through the key components they've built. It's a whole integrated ecosystem designed to solve this crisis.
At the very base, you have the metal blockchain. This is the Layer 0 institutional settlement network. Think of it as this secured, high-speed rail line that institutions use to move high-value assets.
Designed for massive throughput.
And institutional privacy, yes.
Then you move up to the operational layer, the XPR network. What's the difference between XPR and the base metal blockchain?
So XPR Network is the high-performance programmable ledger built on top of that institutional base. But crucially, it integrates digital identity directly into the transaction layer.
Which is paramount now.
It is. In a post-ISO 2022 world, where knowing your customer and enforcing AML rules is everything, transactions must be identity-enabled. XPR provides that regulatory mandated layer of verifiable identity.
And the asset they propose for settlement is the metal dollar, or XMD. Why is a reserve-backed asset a necessity now?
Because the entire premise of the new architecture is asset-backed settlement. XMD is designed as a transparent, verifiable stablecoin reserve. If you're mandated to prove your collateral, you need to settle in an asset whose backing is provable on the chain itself.
Which eliminates the risk of that unbacked fractionalized debt.
The very thing that doomed the old system.
They also have the WebAuth wallet for
Yeah.
non-custodial digital identity. But then you get into the more complex institutional layers. TDBN, A-Chain, and PulseVM. That sounds incredibly technical. How do we explain a bank-grade virtual machine in simple terms?
The Pulse virtual machine is the engine. Its practical purpose is compliance and customizability for banks.
Okay.
So it allows a regulated bank to execute complex, proprietary smart contracts and business logic within the transparent, auditable environment of the metal blockchain, but without exposing their competitive secrets.
So it gives them the necessary institutional privacy.
Right. Yeah. Exactly. Privacy subnets, which is key. But it ensures every asset movement and settlement is still provable and auditable under the new transparent standard. It's how you merge the old banking world's needs with the new world's demands for truth.
This sounds like an ecosystem specifically engineered to address the very weaknesses that ISO 2022 exposed.
It is.
It provides the provable, asset-backed settlement and the compliance framework that the legacy system could never reliably deliver. And the sources point to proof of readiness.
They do. The strength is in the practical, ready-now elements. The sources highlight active stablecoin pilots with over a dozen community banks and credit unions. That shows real-world traction and regulatory comfort.
And it's FedNow ready.
Their infrastructure is explicitly FedNow ready, meaning they are already engineered to plug into the Fed's instant payment system. And they facilitate connectivity like a bank to Ethereum on-ramp through Metal Pay Connect.
So they're not just theorizing, they're already integrating solutions.
That's right. Solutions that provide the necessary compliance, the verified identity, the real-time auditability, and the asset-backed settlement required after November 22nd.
It really meets that regulatory mandate head-on.
Precisely. Being U.S.-based and regulator-aligned, the Metallicus ecosystem is positioned as one of the only infrastructures ready now to handle this convergence of transparency, digital identity, and institutional scale. It's the auditable solution to the crisis ISO 2022 triggered.
This has been a monumental deep dive. To synthesize our findings, November 22, 2025 marked the moment ISO 2022 fully migrated. That synchronization was the trigger.
It was the trigger because it immediately revealed the true, unstable state of the global debt architecture.
An architecture built on leverage and opacity.
And that enforced transparency necessitates a complete structural shift. You cannot maintain a system built on hidden leverage when every clearinghouse is standardized for maximum visibility.
The transition has to happen.
To asset-backed, programmable, compliant digital settlement rails.
And we've explored the Metallicus ecosystem as the fully integrated, regulator-aligned rail that's been built over the past decade to become the backbone of that new transparent era.
So the final provocative thought for you to consider is the enduring power of that initial visibility. Once the illusion of the opaque debt system becomes fully measurable, Once the entire financial world sees the true state of its own fragile foundation, the transition to a verifiable asset-backed system is no longer optional. It becomes economically and politically inevitable.
So we encourage you to think about what other major global sectors, maybe supply chain logistics or energy trading, currently rely on that same kind of fragmentation and opacity to function.
What business structure could be next to face a standardization revelation?